And welcome to this episode of the Capitalized Life and Retirement Show. I'm your host, Matthew Johnson, president and owner of Johnson Wealth and Income Management, a retirement income source located in Clear Lake and Humboldt, Iowa, serving clients in northern Iowa and southern Minnesota. Well, how are you today? I hope you're doing well, taking a little bit of time for yourself. Today, we want to discuss risk. Risk is it's a part of every single day that you and I are alive. Every single day we have risks that we see, risks that we are aware of, and then we also have risks that we're unaware of, risks that we don't see, and yet they still pose a risk to us. When it comes to your retirement, you've probably heard phrases like, the higher the risk, the greater the reward. Is that really true, though? And what if you're a pretty conservative person by nature? What if you're somewhat risk adverse? What if you are that person, that investor that's kind of once bitten and twice shy? You lost money in 2000 to 2003. You lost money in 2007, 8, 9. You lost money maybe in 18 or maybe in 2020. Maybe you lost money in 2022 and 2023. We know the risks are one of those things that it's kind of inherently embedded into investing. And really, regardless of how safe a certain instrument is, regardless how safe something might be, conditioning us to believe that it is, we all know there are going to be risks. Risks to the upside, risks to the downside. Well, today I want to have a discussion with you personally about risk. And because I don't know you, I don't know if you're one of the aggressive types. I don't know if you're more of the conservative type. But I want to be able to have an open dialogue and a discussion about risk so as to challenge you on maybe both fronts. Even if you are more conservative, maybe today's presentation, today's conversation is going to encourage you that taking on a little bit more risk might be a good thing. For those of you that are evil Knievels, you've got it pedal to the metal. You got it pegged all the way to the floor. Well, hopefully I can challenge you that maybe backing off from the risk would be prudent and well merited. Now, if you're new to this radio show, if you're new to this podcast, this YouTube video, I want to just say a warm welcome. If this is a place that you potentially can stick around and you can learn a few things, and you've been maybe looking for a place to be able to become better educated about what it takes to retire successfully. If you've been interested in trying to determine and learn how to take what you've worked so hard to try to accomplish in accumulating and compounding money, saving it for retirement, and turn it into an income stream that you and your loved ones can't ever outlive, I would argue you've come to the right place. This is a place where we just simply don't want to push product. We don't want to just discuss, hey, this is the latest craze and this is the latest thing to invest in. No, I want you to understand the mechanics and why things work the way that they do. The things that maybe are a little too embellished by the financial services world, a little maybe too good to be true. I want you to be aware of those things, but I also want you to be aware of the things that may be very useful and you didn't even know that they existed. Things that you can implement into your own retirement savings portfolio so that you can become more successful and you can have the peace of mind that you deserve. Why? Why do all these things? The ultimate goal is we all want the same thing. We want to be able to retire successfully and have more income than what we need. That's the definition of a successful retirement. So whether you're finding my book, The Capitalized Life, at major book resellers or Amazon, and you're giving it a read, or you're stopping by and watching this YouTube video, or maybe going to the website at johnsonwim.com and reading the white papers and going back and listening to past radio shows, I just want to say, welcome to our program. Now, from time to time, I have this lightning strike of brilliance, or I don't know that brilliance is really the idea, but I have this idea and kind of an analogy, a metaphor that will pop into my mind from time to time. And I got to write these things down. I guess this is one of those signs of getting older, when all of a sudden you have a flash of brilliance. You need to write it down or you'll forget it. But I was dealing with a lady the other day who was a self-proclaimed conservative investor. She had lots of cash. She used CDs. She even went as far as having money in some annuities. But when it came to the stock market, she was absolutely petrified. She said, I don't like risks. I don't take risks. I'm not a risk taker. I'm not a gambler. I'll never take on risks. And it got me to the point where I wanted to challenge her idea. You see, I knew that she took on risks. I just knew that she really didn't consider them to be risks. And so I guess what we're going to do in today's radio program is we're going to start out with those of you that are a little, maybe too conservative. Maybe, again, you've been once bitten and now you're twice shy. You've lost money. Maybe you've had a bad advisor. Maybe you've had bad advice. Maybe you've had investments that have just gone wrong. Maybe you did things yourself and it just didn't pan out too well. And so for one reason or another, you've now become very risk adverse. But I went on to ask this lady, I said, how did you get to work this morning? And she said, well, I drove. And I said, okay. Well, when you got into your car and you turned the key or you pushed the button to start your car, did it ever dawn on you that you had between 4 to 8 explosions happening simultaneously, just mere inches from your legs? Did that ever dawn on you? And she began to smile as she was thinking about this. And she said, well, no. And I said, does that ever bother you? Did you ever consider driving down your residential street and then getting out onto the highway, driving at 55 or 60 or 65 or maybe as much as 70 miles an hour, that you had pieces of metal flinging at basically thousands of cycles per minute that could fly apart at any moment? Did that ever dawn on you? Did it bother you? She said, well, no. So I went on to explain that she did take on risks. These were just risks that either A, she had become okay with because they had earned her trust that it really did not pose too much of a risk for her, or she had been simply conditioned to believe that those risks were non-threatening. When we think about our money, being able to be diversified amongst a broad array of different investments is more important today than ever before. With individuals taking and pouring their money into artificial intelligence, or just a few years ago, pouring their money into Bitcoin, or before that, pouring their money into gold, or whatever that thing, that investment of the hour, that investment of the day, that darling that was new and shiny. The reality is that so many of the things that we're investing in, they're not wrong. So many of those things are absolutely, totally appropriate. But what you're looking for is you're looking for controlled risks. And in this case, I want you to just think about what we have seen happen within something as simple as the lowly CD. You had your day in the sunshine when the interest rates went up 11 times between 2022 and 2023. At the end of 2023, you were singing in the rain. You were getting CDs that were paying you north of 5. Some of you even got as lucky as getting maybe a touch at 6 or maybe 6.1. But what has happened to CD rates since then? Was it long-lived? Did that last a long time? Did it last as long as you wanted it to last? And I'm willing to bet the answer was absolutely not. And so it felt good in the moment that you were able to make good interest, better interest than you had made in well over a decade. But you knew darn well that it wasn't going to last. And now, today, you're in a position where CD interest rates have now fallen into the 3s. All the while, inflation, is equal to or potentially even greater than. And that is a problem. You see, we have risks even on the most conservative side. We run the risk of not making enough on our money to stay ahead of inflation. And this is where we have to broaden our scope of horizon. We have to broaden our understanding of various tools. You see, the bank is not the only place to invest your money, just like the insurance company isn't the only place to invest your money, just like the mason jar is not the only place to invest your money. Are you working with an advisor who has the licensure to be able to educate you about the entire universe of things? Now, let me ask you a question. If you were able to make roughly 40 to 50, maybe even double, 100% more interest than what you're making on your CDs, and you were only asked to take on a little bit of risk, would you do it? Of course, you're probably going to answer me, well, it depends upon what the risk is. Well, of course, in this case, the risk would be the risk of loss, right? And this is where we discuss things like fixed income. You see, if you can go from having a bank guarantee to maybe accepting the promise of a corporation, a good quality, well-rounded, free cash flowing corporation, a corporation like AT&T. For instance, if you look in the news today, we see that Oracle is taking and trying to raise, $150 billion, maybe $15 billion. Maybe I added an extra zero onto that number. But a tremendous amount of money, capital being raised through individual investment grade rated bonds. They're asking you to buy a bond from them. And in return, they're paying you interest contractually on that bond. Does that sound like a good deal? Well, sit tight. When we come back, we're going to discuss more risks and things that you can do to help you further grow your money and to do it safely. Sit tight. We'll be right back. And welcome back to the second half of the Capitalized Life and Retirement Show. I'm your host, Matthew Johnson, president and owner of Johnson Wealth and Income Management, a retirement income source located in Clear Lake and Humboldt, Iowa, serving clients in northern Iowa and southern Minnesota. If you're just joining us, welcome to today's program. Today we're discussing controlled risk versus uncontrolled risk. So let's go back in time. Let's go back to that conversation that I was having with that teacher, that woman who was self-proclaimed as a non-risk taker. And yet you and I both know that no matter what, if she's pushing her lawnmower, she has risk. If she's driving her car, she has risk. If she's eating food out of a box, or sleeping at night, or even walking around during a rainstorm with lightning, she's at risk. All of us deal with risks every single day. But I would argue it is the uncontrolled risks. It is the risks in which you and I aren't aware, or we don't know, or we do not understand the full expanse and to the depths of the risk that we're taking. Those are the things that scare us. And you see, once I began to ask this woman if she had ever used things that were contractual in nature, things like fixed income, things that contractually paid her interest, contractually paid her dividend income every single year. All of a sudden, she realized, well, I might be willing to try that. And as a result of taking that little step of faith, as a result of being able to open her horizons and her mindset and her acceptance of using other tools to become better diversified in the way in which she invests her money for retirement, not only was she able to increase the output from her own principal, she was able to double it. Now, let me ask you, if you could increase by 50%, 75%, 100% the productivity of your principal right now, what your principal is producing, do you think that that would benefit you? If the answer was yes, this is where the fiduciary, the fixed income specialist, the individual who has a skill set of creating income can be a tremendous value and asset to you. You see, our financial services world has helped us, no doubt, better understand how we can grow our money. We can take and put money into certain instruments, and then they tell us to look the other direction. Just don't worry about it. It's the next 20, 25, 30 years of accumulation. Set it and forget it, right? It's not the timing of the market, it's the time of the market. They've got all the phrases. They've always had the phrases. And certainly, some of those phrases have merit. These are things that we don't want to fuss over from day to day. We don't want to be looking at what is happening every single day, or we will drive ourselves mad. But what happens when you get within 5 years of retirement? Now, all of a sudden, risk becomes a very real thing. We don't want to run the risk of losing our money, losing 20 or 30 or 40 or even 50% like we did potentially earlier in the accumulation stage of our life. What we want to do now is we want to batten down the hatches. We want to begin to take our winnings off the table. We want to make certain that our coffers are full of principal and that they stay full. And why is that? Because it's that principle that's going to get you through the rest of your life. But what about the risk of running out of money? Doesn't this kind of relate to the person who seems to be the evil Knievel, the Tasmanian devil, the person who's got the pedal to the metal? They've got it pegged all the way to the floorboard. You're investing so hot, so heavy. You're putting your money into so many assets that your hair is on fire because you realize, well, my only chance of never running out of money is just making certain that I stay ahead of my spending. I make more than I spend. I make so much that I can live my lifestyle and take withdrawals. And even if I live to 95, I'll still have a penny left in my trunk of money. Now, that has to be absolutely nerve-wracking. That can be exciting. It can have sizzle, no doubt. But that's where we're starting to lean into the uncontrolled risk department. And you see, here's the thing. For so many investors today, you may be in a position where you have enough money to last the rest of your life, but you don't know it because no one's ever helped you see that you do. And you're taking on risks unnecessarily. You're driving yourself bonkers, trying to find the next updraft so that you can invest and you can make money because you feel like you're so far behind. And all of your friends, they're suggesting to you, oh, you have to be in on this trend. You have to be on that trend. You're watching the numbers of inflation. You're seeing how people are living longer than ever before. And this is creating a mental stress and an anxiety that's forcing you to become more and more and more aggressive. And yet your gut Your belly button is telling you that it's too much risk. You see, this is where we have to turn our attention to purpose. It doesn't mean that performance is wrong, but performance is what we focus on when we know we don't need this money. We're 25 and 30 and 35 and 40, 50. But once we get closer to 60 and 65, we start getting closer to that day in which we know we're going to be transitioning from a paycheck to a playcheck. We need to be able to learn and determine what are the tools necessary that we can take this bucket of money and we can keep it safe. And not only can we keep it safe, but that bucket of money can be productive. It can produce for me an income stream, interest and dividends that are never ending, interest and dividends that seem to be a steady supply, like sun as an energy source to the solar panel every single day. If this is something that you didn't think was obtainable, my friend, you've got options. You have solutions. You have alternatives. It is not necessary to continue taking on the same risk that you have been. I want all clients to grow. I believe in having money in equities. And we all know that Jerome Powell thinks that equities are very highly valued right now. And you know what? He's 1,000% correct. There's stocks out there that are so far above a normal and rational price, it's laughable. But the reality is that at the end of the day, if there's more buys than there is sells, the market still goes up. But when does that other shoe drop? And in your haste to try to make up for lost time, in your urgency to try to make up and get gains and get the biggest gain possible and make smart decisions and outwit everyone else and outwit the market and look at the trends and be inventive in how you're investing and dealing with all of that mental stress and anxiety. What if there was a way that that principle could be producing for you money night and day, like rent checks coming from renters, without ever having to deal with a tenant? How does that sound? How does it sound having $60,000 of dividends and dividend income for every $1 million that you've worked hard to save? That to me sounds like an enjoyable retirement. That sounds like a person who's able to take and reduce the risk on a broad variety and, in fact, a vast majority of their money. And if they still want to have a portion of their money that's aggressive and kind of pedal to the metal, well, that's fine, because they know that they have safeguarded the rest of their money. And now they can sleep peacefully at night. Whether we have tariffs, whether we have deals that go through or we don't, whether we have things in smooth sailing process or we have a president who decides to say something or do something that upsets the apple cart. You see, sometimes we have to be thinking about what kind of risk is really the right kind of risk, uncontrolled or controlled. And I would argue that risk is something that we all need a little of. For some of us, we need to increase our risk so that we can make more on our money. For some of us, we need to back off from the risk so that we don't run the risk of falling off the cliff and endangering and jeopardizing our retirement, the retirement that we look forward to for literally decades. We don't want those hopes and those aspirations and those goals and dreams to be dashed simply because something changed in the market or the economy, and you ended up taking it on the chin. So, what's the encouragement in the lesson here? I believe the lesson is you don't know what you don't know. And sometimes it's the things that you don't know that can hurt you. And so this is where you want to begin to work with a qualified fiduciary, a financial advisor who has the heart of a teacher, someone who is there and someone who's willing to be patient and taking the time to educate you about what you're currently doing, how your portfolio is currently positioned, what the risks are, what the expenses are, and then goes to show what potential alternatives there could be to help you have less risk and more of a productive income stream being produced every single day, every single week, every single month, every single year by how you have chosen to invest your money, either in a little way or even in a big way. Food for thought, no doubt. So, let's say you have questions. Let's say that you're wondering, what's the next step? Well, this is where I encourage you. Go to our website, johnsonwim.com. Drop me a line. Tell me, what are the things that concern you the most about your portfolio? What are the risks that you're afraid of? Begin a dialogue, a conversation about these things so that you can come to grips and you can come to solutions before it's too late. I'm Matthew Johnson. Thank you so much for listening and watching. And remember, it's up to you to make today a great day.